Welcome back to the critique.
Glad to be here.
So today we're looking at an ebook on the medical billing process. It's really comprehensive, covers the whole revenue cycle, denials, payments, all of it.
A really solid foundation.
Absolutely. So let's jump right in on how we can make it even more practical for the professional biller on the ground. A key theme that seems to run through the whole thing is the claim life cycle. Specifically that moment, where a denial becomes a real financial decision.
One that hits both the provider and the patient.
Exactly. So enhancing the structural flow between denial management, payment posting, and patient responsibility calculation is really necessary to show that entire financial life cycle efficiently.
Right, because right now the chapters are sequential, but the process itself, it's instant.
That's it.
And, it's laid out very clearly, but I do wonder if we've really considered the impact of separating denials in Chapter 10 from payments in Chapter 11, and then patient responsibility way over in Chapter 12.
It sort of breaks the chain of events.
It completely breaks it. It prevents the reader from immediately getting the financial punch of a denial code. The material reads like, first you appeal, then you look at the EOB, and, finally you figure out the patient's bill.
Which is the textbook way, sure, but in practice.
In practice, that denial reason is the EOB. It instantly tells you what the patient is going to owe.
Yeah, that interdependency needs to feel much tighter, more immediate. We almost need to bring the financial consequence of that denial forward in the story.
Exactly. A biller doesn't wait for Chapter 12 to find out there's patient debt. The second that denial code hits the remittance advice, they know.
So the weakness here is that the current structure forces the reader to pause that financial thought process. They're focused on the procedure, the appeal, before they even grasp the monetary fallout.
I see. So by pulling that financial consequence forward, we're shifting the focus from just a procedural fix to an immediate profitability assessment.
Right. The suggestion is really to restructure these sections to show that instantaneous feedback loop. Show how a claim outcome immediately translates into revenue or, lack of revenue.
And patient debt.
And patient debt. It makes the whole thing so much more relevant to actual revenue cycle management.
Okay, so we need to bridge that gap between the denial reason and the resulting account balance.
Yes. How can we make that connection really visceral using the codes that are already in the material?
Well, we could use some contrasting examples. Like, take a specific denial reason. Something really clear-cut, like CO96, non-covered service. The payer is saying, flat out, we don't cover this.
Okay, and the financial consequence of that is?
Immediate. We show a quick calculation. The CO96 code appears on the RA from Chapter 11. Because it's not covered, the payer's allowed amount instantly drops to zero.
And that flows directly to the patient responsibility calculation.
Directly. Now the patient owes 100% of the billed amount. There's no gap. The denial code and the collection process become one single event.
That definitely makes it immediate. It shifts the thinking from how do I fix this denial to how do I manage this difficult patient collection?
Precisely. And then you contrast that with a more successful claim. Use a scenario with, say, a CO45. Contractual adjustment.
So CO45 isn't really a denial, it's an expected reduction based on the contract.
It's a payment term, exactly. So you show how that adjustment reduces the billed amount to establish the allowed amount. And from that number, you calculate the patient's part, their deductible, their coinsurance.
Which clarifies how all those RA codes are what actually govern the patient's bill. It stops patient collections from feeling like this separate, isolated step that happens way down the line.
You're integrating Chapters 10, 11, and 12 into a single, cohesive RCM moment.
That integration is really key. Okay, so if we tighten up that money flow, the next logical place to go is those really sticky coverage problems.
Coordination of benefits.
Exactly. COB denials, they're high risk, they're costly, and the material does touch on the basics like the birthday rule and out-of-pocket maxes.
Right.
So the discussion on coordination of benefits needs to be expanded with more complex, high-risk, and frankly more practical denial scenarios to really prepare the reader for what they'll face.
I think that makes a lot of sense. The current explanation, it relies pretty heavily on the birthday rule example, and for a seasoned biller, that's, relatively simple.
It's COB 101.
It is. And since COB issues are identified as a major denial driver, that's the CO22 denial code, just defining the birthday rule kind of misses the whole point. It overlooks the complexity that causes the denial in the first place.
Especially those counterintuitive situations where you're trying to figure out primary versus secondary coverage.
The material just kind of glosses over those.
Yeah, and we're targeting a professional audience here. They want to know what to do when things go wrong, especially with messy overlaps, like government and commercial payers.
So the suggestion is to bolster this section by integrating specific rules for those overlaps and providing actual actionable steps for fixing the denials that come from them.
We have to turn the rule into a real, painful billing failure that the reader can learn from.
I agree. Is there a risk that by focusing on the basics, we're overlooking the really critical stuff, like the Medicare COB rules that are mentioned briefly in Chapter 12?
We should probably drill down on the notorious 20-plus employee rule. Oh, absolutely. That's a classic trip-up for billers. Logic tells you Medicare should be primary for an older patient, but the law says something else entirely if they're still working and have employer coverage.
Let's use that exact scenario then. You have a patient with Medicare plus employer insurance. The employer has, say, 20 or more employees. The material correctly states the employer plan is primary.
Right. The biller knows the rule, in theory. But what happens when the system defaults or someone at the front desk makes an error and sends the claim to Medicare first anyway?
That's where you get the denial. It leads directly to a COB denial, code CO22. Because Medicare just rejects it outright. They say the primary payer rules were broken. This is a super common, often high-dollar denial.
And that links the policy knowledge directly to claim failure. It shows the reader that just knowing the rule isn't enough. You have to execute it correctly. So what's the specific fix?
The actionable suggestion is to demonstrate the precise steps. You have to go into the system, you have to correct the payer order, make sure the employer's plan is listed as primary, and then you resubmit the claim to the correct primary payer. It's a sequencing fix.
And we should probably contrast that with a simpler denial, like a CO18 for a duplicate claim.
Good point. A CO18 is usually just a system glitch. A CO22 requires you to understand federal rules and resequence the whole financial flow.
Exactly. This would add a ton of practical value to the denial management strategies. It shows that not all denials are created equal. Some require deep policy intervention.
It turns the section from just definitions into actual risk management.
Okay, so let's move into the future of reimbursement. What I really like here is the clear distinction between fee-for-service, or FFS, and value-based reimbursement, VBR. It shows the book is looking ahead.
It's definitely a crucial trend.
It is. But converting the conceptual definitions of FFS versus VBR models into clear, actionable differences in terms of claim submission and documentation will provide some really crucial practical insight.
You mean, how does a biller's actual job change?
Exactly. How does my daily job change when my organization signs a VBR contract?
That's a fascinating point. Because the text defines VBR, it talks about outcomes and quality, lists the impacts like bundled payments and pay for performance.
All the high-level stuff.
All the high-level stuff. But the operational core of the book, the chapters on creating and sending a claim, it's all built around traditional fee-for-service billing, CPT codes, ICE-10, the CMS 1500 form.
So the VBR chapter feels a bit like a conceptual overlay, not something integrated into the daily workflow.
Exactly. The connection between the big VBR goals and the specific, billing actions a person takes every single day, that connection seems like it could be stronger. How exactly does my claim submission process change tomorrow?
That's the million-dollar question for a biller, isn't it? So the recommendation is to provide concrete contrasting examples. Detailed the specific documentation or charge entry requirements that are unique to VBR models.
To make the future actionable for the biller today.
Right.
Is the connection between the reimbursement model and the actual data on the claim form fully established? We should probably show contrasting workflows.
Yeah, let's start with bundled payments. The text defines it as a single sum for an episode of care. How does that look to a biller who's used to FFS?
Okay, so for bundled payments, in a pure FFS world, the biller is entering CPT codes for everything: the surgery, the physical therapy, the follow-up visits, the supplies. Everything gets a code and expects a payment.
Maximizing claim volume.
It's all about maximizing claim volume. But under a bundled payment VBR model, the biller's job is to track all of those associated CPT codes internally, even if only one single overarching payment code gets sent to the payer for the whole bundle.
That's a huge shift in the internal RCM workflow.
Huge. The job changes from external claim creation to meticulous internal cost and quality tracking. The biller basically becomes an internal auditor.
Making sure all the costs associated with that episode of care actually fit inside the bundle's payment cap, even for services that don't generate their own separate claim.
It's a massive mindset shift. They have to understand that not everything that generates a charge will generate a paid claim. It's about compliance and cost containment now, just as much as reimbursement.
Okay, that covers bundle payments. What about pay for performance, P for P, which ties money to quality?
For pay for performance, we need to specifically show that the biller's role expands. It's not just standard claim submission anymore. They have to ensure that quality measures, like the HADIS scores mentioned in Chapter 20, are meticulously documented and reported right alongside the service codes.
Because that's how you secure the incentive payment.
Exactly. So if the provider forgets to document a key screening, the biller doesn't just lose the fee for that one service. The whole organization could lose the incentive bonus for that P for P contract.
So in FFS, you submit a CPT 99213, you get paid for a 99213. Simple.
Simple. In P for P, you submit the 99213 plus the quality measure code, maybe a Category 2 CPT code that proves the patient got the necessary preventative care. If that quality data is missing, the basic claim might get paid, but the biller has failed to get the maximum payment under the contract.
That makes the VBR discussion immediately relevant. It shows the reader that VBR isn't some abstract concept for the CEO. It dictates their daily charge entry and their documentation audit responsibilities.
It transforms their role from transaction processor to a key part of quality compliance and cost management. Adding these workflow examples will give that chapter the actionable teeth it needs.
That brings us to the end of this critique. So, to quickly recap, we found 3 main opportunities to strengthen this really excellent material.
Moving it from theory to highly actionable guidance.
Right. First, we focused on maximizing the immediate impact to financial outcomes by tightly integrating the flow between denials, payments, and patient responsibility. We recommend showing how a code like CO96 instantly translates into revenue loss or patient liability.
Eliminating that sequential gap between the chapters.
Second, we suggested deepening the practical scenarios for complex COB denials. So, moving beyond the birthday rule to tackle those high-risk overlaps, like the Medicare 20-plus employee rule, and showing the specific steps to resolve a CO22 denial.
And third, we advise translating the conceptual distinction between fee-for-service and value-based reimbursement into concrete, actionable changes for the biller.
Which means showing, with contrasting examples, how things like P for P and bundled payments fundamentally change their internal RCM requirements, demanding more tracking and quality reporting.
These feel like really focused, high-leverage changes. They'll significantly improve a reader's preparedness for real-world RCM challenges.
We absolutely believe implementing these structural and scenario-based improvements will elevate this already comprehensive eBook into an essential, actionable guide for any medical billing professional.
Agreed.
Agreed.
We invite you to refine the material based on these suggestions and, of course, submit your work back in again for another critique. Until then, keep improving, keep challenging yourself, and keep writing.